Lots of action over the next 30 minutes. But first up, let's talk about the market action of the day. The market slipped in the last 30 to 60 minutes of trade to erase a major chunk of gain seen in the first half of the day. So Sensex was at one point at a record high of about 39,106, but slipped in the last hour, as you can see on your screens, to end only 0.5% higher. Nifty failed to hold on to that 11,700 mark, but ended 0.25% higher. Mid-caps rose in line with benchmarks and closed 116 points off the day's high. The Bank Nifty ended in the red after falling 322 points to be exact from its record high of 30,000. Surbhi Upadhyay is here with a wrap of all the action. Surbhi.
Well, these all-time high levels, they end up tantalizing and teasing, and that's exactly what happened today. So you had that all-time high hit on one index, but not on the other. The Sensex did manage to touch that magic mark. In fact, we had a high of 39,115 at the highest level. But then look what happened. Towards the last 1 hour, the momentum just seemed to fizzle out. For whatever reason, people wanted to get cautious, take some money off the table, particularly in bank stocks. And that's why we had that fizzle-out move towards the last 60 minutes of trade. And the Nifty really couldn't make it quite there. At one point, the Nifty was just 23 points away from the all-time high. But finally, we had a cool-off, and that index had to contend with a gain of less than 0.5%. The Bank Nifty has been really interesting, and that's been the fulcrum around which trade has been built. A lot of profit-taking suddenly setting in today. Almost a 400-point drop from the highest level, and a very severe sell-down towards the last 30-40 minutes of trade. Now, you could just call it profit-taking. You could call it slight nervousness. The one thing that's going for the bulls is the fact that global markets have been very, very resilient and buoyant. Hopes afloat of maybe a resolution in trade talks, etc. So if that party continues, then maybe it's just a matter of time before the bulls really reclaim that level on the Nifty. Now, let me quickly come down to stocks and fill you in on the action. Let's talk about the winners. Since I mentioned the global party, a lot of the global-facing stocks naturally did very, very well today. So you had names like Tata Motors rising right to the top of the Nifty tally. That company contends that the fourth quarter will be much better for JLR, and for now at least that worked well for the stock. Hindalco, Tata Steel on the commodity side did well. Maruti, because the numbers are not that bad. Now, at least month on month, we're seeing some sense of revival, some hope of revival coming in. So that was a good stock. L&T and RIL kept firing away as well. RIL almost touching 1,400 in today's trading action. A good day for IT stocks as well. So whether it was Wipro, HCL Tech, TCS, Infosys, the entire IT top brass was firing away. So what was the problem? I come back to the banks, and here's what I'm saying. IndusInd Bank, Axis, SBI, ICICI, most of these names were really languishing, HDFC Bank. And when this part of the market doesn't work, you know that taking out all-time highs could be a slightly difficult proposition. Other laggards included the likes of Z, UPL, Eicher Motors and Hero Moto. While Maruti bucked the weak trend today, the two-wheeler maker stocks were still down and out. Let's come to the mid-cap screen. And again here, from the highs of the day, there was quite a bit of a sell-down. The mid-cap index only up 0.25% towards the end. What was up? I was talking about Tata Motors, the main stock. Even the DVR was fired up. IRB, Minda Industries, these were some of the names on the upside. Intellect Design, which announced an important deal, that stock was up about 6-7%. And Andhra Bank was surging away, almost 14% up. Actually, PSU banks have had a great rally in the month of March. That index is up 24%, whereas the Nifty Bank is up only 14 to 15%. Speaking of PSU banks, let's talk about the second largest PSU bank of the country, Bank of Baroda, its new avatar with the merger done, finally making its debut, and actually a decent debut in green, 2.5% up on that stock. Now let's talk about the losers. Escorts, Ashok Leyland, some of the names on the downside. Shriram Transport Finance was also on the weaker side, and profit taking on Prestige Estates as well as DLF. I will end by talking about a brand new trading instrument that's right now here for us. India's first ever REIT finally made its debut today. And not too bad, the stocks on your screen are the listed equity stocks, but the REIT itself, Embassy Office Parks, that actually ended with a gain of about 4%. So at least, a good starting point for that one particular name. All in all, profit taking, yes. Let's see if the bulls can conquer that magic mark of 11,760 tomorrow. If global cues are willing, then maybe it's just a matter of time.
Okay, Surbhi, thanks for breaking that down in detail for us. Let's talk about stock-specific action. Jet Airways was down by about 1.2% in trade. This as lenders to Jet Airways have chalked out an alternative plan to keep the airline afloat if they fail to find a willing investor to pick up majority stake. The plan suggests ways to ensure a fund infusion of over 10,000 crore rupees, including transfer of Etihad and Naresh Goyal's stake to an independent trust. Anu Sharma has more on that proposed strategy. Anu, take us through the information that you have picked up so far from your sources.
Well, as per the latest development in Jet Airways matter, the lenders are now looking at an alternative plan to rescue the airline in case they are unable to find a single investor to buy a majority stake. For a full resolution of Jet Airways' financial crisis, the airline would need a total of 10,645 crore rupees. That is what we got to know from a review of the draft resolution plan. Now, the plan B lists out three major sources to raise this sum. First step requires all shareholders to transfer a part or entire stake to an independent trust. The trust will be managed by trustees appointed by the lenders, and the lenders will have a call option on the shares owned by them at 150 rupees per piece. New cash equity infusion of around 5,135 crore rupees will be done through rights issue at the rate of 150 rupees per share. This will bring two new investors on board and result in complete exit of Naresh Goyal and Etihad. Secondly, 2,400 crore rupees loan will be provided to help in refinancing of planes. And the third step will be 2,000 crore rupees in non-fund based facilities. Now, after this, draft plan directs the domestic lenders to write down their entire debt of 2,600 crore rupees, and foreign lenders are required to take a haircut of 1,170 crore rupees. The plan does not ask for any write down by lessors and other creditors. Overall, lenders are hoping to achieve gains of over 2,600 crore rupees by March 2022, assuming that the share price of the company reaches the levels of around 300 rupees per share by that time. So at the end of Plan B, we are looking at Jet Airways 30% owned by lenders, 20% and 25% by the two new investors, 15% by the trust, and remaining 10.7% of public shareholding. Now that a backup plan is in place, it remains to be seen whether the first plan takes off. Consortium of lenders is expected to invite expressions of interest for stake sale in Jet Airways on April 9th. But one key point for the airline, whether it goes ahead with Plan A or B, will be its ability to retain key landing and takeoff slots at major airports. Back to you.
All right, Anu, thanks for joining in with that. But let's move on with financial year 1920. Ending yesterday, the final macro picture for the government is looking pretty healthy. So let's start with the fiscal deficit numbers. Sources tell CNBC-TV18 that the government has managed to meet the fiscal deficit target of 3.4% in FY19. Expenditure management and small savings helped the government meet this target. On the GST front, collections for the month of March have crossed 1.06 lakh crore rupees, which is the highest ever. The direct tax mop-up is also likely to touch 11.5 lakh crore rupees in FY19, which is just 50,000 crore rupees less than the revised estimate of 12 lakh crore rupees. Moving on, the Reserve Bank of India will announce its first rate decision of FY20 later this week. And ahead of that, we caught up with two veteran bankers, Deepak Parekh and Ramesh Sokti, for their predictions. Remember, the RBI had cut the repo rate by 25 basis points in February. This rate cut had come after a gap of 1.5 years. Parekh, the chairman of HDFC, meanwhile feels that Monetary Policy Committee might have to decide between going for a rate cut right away or waiting till the monsoons to take a call. Ramesh Sokti, the MD and CEO of IndusInd Bank, meanwhile predicted a 25 basis point repo rate cut.
I think rates are going down, and it will only be natural that transmission will happen. Of course, there's a new experiment with the benchmarking rate, external benchmarking rate. But irrespective of that, I think rates will certainly move down, and this trigger of another 25 basis points maybe in the April policy probably will hasten the process.
Well, the good news is that the US Fed has said there'll be no more increases. That is the good news for India. Now, it really depends on the monetary policy because, it's just before the monsoons. And food inflation and fuel inflation are the two biggest contributors. And food inflation has been low over the last year. And fuel went up and has come down again to reasonable levels. So it depends what the monetary policy waits for the monsoon and takes a call after the monsoon or takes a call this week.
All right, let's get you another important corporate story. Ramesh Sopti is ready to helm Indices Bank beyond even after crossing the 70 years age limit. Sopti is currently 69 and he will cross the mark only in March next year. Speaking to Ritu Singh, Sopti said he would be happy to continue, but he will need the RBI's blessings. Another veteran private banker, Aditya Puri of HDFC Bank, is currently 69. Here is Ramesh Sopti on a potential extension of tenure.
I have to go up to March 2020, and I think Aditya has even more time till the middle of next year. So I think these are early days. If there are debates and discussions at board levels and others and all, I'm not fully aware. But I think both of us would be very happy to continue. At least speaking for myself, I'm quite happy to continue.
Moving on to the auto sector, March auto sales figures have started to trickle in. So Maruti shares gained close to 7% after the company saw a 7% rise in sales from last month. Ashok Leyland also reported a good set of numbers, while M&M's tractor sales disappointed. Sonia Shenoy is here to wrap up all the action. Sonia, how were the auto numbers this time around?
Well, thanks a lot for that. It was a quiet month for the auto sector. Lackluster, actually. Demand has been weak, so there's been just a single-digit growth across pockets. The big takeaway really is that tractor sales have fallen substantially. So M&M, for example, saw a 30% fall in domestic tractor sales, and they did say that demand has been weak. The Rabi sowing was not as good as expected, and festive season has been postponed. Even Escort's tractor sales were under quite a bit of pressure, just a 1% growth seen over there. Maruti's sales were lackluster too, it's a downtick of 1.6% that Maruti saw. But the good part is there's been a month-on-month recovery in Maruti sales, went up about 7% month-on-month, and R.C. Bhargav, the chairman of the company, indicated that sales will definitely pick up post the elections. Apart from that, Ashok Leyland as well, a good month-on-month improvement is what we saw, and 18% growth compared to what we saw in the month of February. However, year-on-year sales continue to be lackluster. So the sum and substance was that, yes, tractors was a negative surprise this month. Otherwise, by and large, in line with street expectations.
All right, Sonia, thanks for joining in. So auto sales are by large in line with expectations, as Sonia points out. But here's the latest in the standoff over the distribution of the Arcelor bid amount for SR Steel. SBI has moved the Supreme Court challenging the NCLAT order that asked banks to reconsider the distribution of 42,000 crore rupees among creditors. The NCLAT had directed redistribution as per NCLT order, which had advised an 85:15 split between financial and operational creditors. However, the Committee of Creditors will meet last week had voted in favour of giving additional 1,000 crore rupees to operational creditors as part of the settlement offered by ArcelorMittal, but rejected Standard Chartered's claims for a higher amount.